Welcome to the Friday edition of Tech Stocks Daily, where today's lineup is nothing short of epic. We'll take you on a whirlwind tour of Apple's jaw-dropping $300 billion stock plunge tied to tariff troubles, dig into AppLovin's courtroom chaos over alleged advertising trickery, and navigate the trade desk's saga of AI rollout woes that shook investors. As these tech titans wrestle with global challenges and market teeter-totters, we'll explore how these dramatic twists could shake up your investing game. Buckle up, because this tech stock roller coaster is just heating up. Grab your popcorn, folks, because today's episode is all about one of the biggest blockbuster dramas playing out in the tech stock universe. Yes, we're diving into the pandemonium that's swirling around Apple. The technology titan found itself entangled in a whirlwind of market bears and tariff scare tactics that have sent its stock on a wild roller coaster ride. But don't worry, you're not alone in this if you've felt the heat. So what's the deal with Apple's stock? Well, hang on to your AirPods, because we're looking at a stock drop of nearly 10% yesterday, causing approximately 300 billions, yes, billion with a B, in market capitalization to just vanish into thin air. To top off the drama, it's the worst plunge Apple's endured since January of 2013. The culprit? New tariff threats that have investors shaking in their boots, given how deeply entwined Apple's production line is with China. Nearly 100% of iPhones hitting the shelves in the US are birthed in China, along with 90% of Macs, 80% of iPads, 90% of Apple Watches, and 35% of AirPods. Talk about a serious attachment. Leading from behind the lines is Needham analyst Laura Martin, who's cheerleading Apple towards higher grounds with a gumption that suggests a buy rating and a warm embrace of a $260 price target. Certainly, betting on Apple isn't a gamble. It's about faith in tech legacy. She's banking on the high chance of Apple getting exemptions from the US tariffs, but hopes can always conflictingly float in these turbulent financial seas. But wait, there's more irony to savor. If tariffs tug harder on Apple's margins and they don't secure exemptions, analyst Barton Crockett suggests that the company might get hit hard with a stout $39.5 billion in tariff-related costs. Hello, new budget plans. The possibility of cost implications trickling down to your next iPhone purchase isn't too distant. Wedbush's Dan Ives paints a grim but intriguing picture. Want US-manufactured iPhones? Update your budgets because an iPhone made on US soil might just revolt your wallets with a whopping $3,500 price tag. No one ever budgeted the term luxury into buying cell phones, right? Amidst this volatility, Apple's rooted in creating solutions. Earlier, they committed a $500 billion investment in American infrastructure to bolster innovation in engineering, R&D, manufacturing, and artificial intelligence. Surely a finger-crossed move towards tariff exemptions. But there's a tightrope to tread, as we all await with bated breath whether global politics will squash Apple's innovative momentum or nudge it into alternative production geographies. So, whether it's strategizing their next move in response to boiled-over tensions or simply keeping calm while the tariff storm rages, Apple has exhilarating days ahead. It's never a dull moment in the tech space, and Apple's moment of suspense and sheer brilliance is something I'll keep you updated on. Don't leave your seats. More news is always just teching its way around the corner. Oh boy, grab your popcorn, because we've got some juicy drama unfolding in the world of tech stocks today, and AppLovin is right at the center of the storm. So, let's dive into why AppLovin, a major player in the mobile advertising space, is making headlines. Recently, two law firms, Levi & Korsinski and Berger Montague, have announced class action lawsuits against AppLovin Corporation over alleged securities fraud. This isn't your everyday stock market hiccup, folks. We're talking about accusations that could have profound implications for AppLovin's reputation and financial standing. The crux of these lawsuits centers on claims that AppLovin and its senior management allegedly misled investors about the company's financial health and the revolutionary capabilities of its Axon 2.0 digital ad platform. Remember those advertisements you couldn't escape from while playing your favorite mobile game? Well, the tech giant was banging the drum quite loudly about using cutting-edge AI technologies to match ads more effectively with mobile games. But it seems things weren't quite as they seemed. On February 26, 2025, the truth, like an uncomfortable splash of cold water, came to light when reports from analysts, including Fuzzy Panda and Culper Research, revealed disturbing practices. AppLovin was accused of reverse engineering and exploiting advertising data from Meta platforms, along with accusations of manipulating ad click-through rates and app download statistics. Imagine a world where ads click on themselves or use sneaky gimmicks to inflate download numbers. Sounds like science fiction? AppLovin's critics say it's not. After this explosive revelation, AppLovin's stock took the kind of nosedive you'd expect when a roller coaster loses its tracks. The stock price tumbled from $377.06 per share to $331 per share, virtually overnight. That's a hefty 12% drop, leaving a lot of investors both stunned and likely not very happy. Both law firms are calling on AppLovin investors who suffered financial losses during this tumultuous period, from May 10, 2023 to February 25, 2025, to step forward. They're offering a chance for affected shareholders to be part of class action suits aiming to claw back some of those losses. Investors have until May 5, 2025, to request the court to appoint them as the lead plaintiff, but participation doesn't require being appointed. Now, Levi and Korsinski and Berger Montague are no small fries in the legal world. These firms have lengthy histories of successful litigation in securities fraud, so they know their way around a courtroom armed with stacks of evidence and questions. Today's headlines serve as a stark reminder of two things. First, how fast tech fortunes can rise and fall, and second, the importance of transparency in maintaining investor trust. As these legal proceedings wind their way through the courts, all eyes will be on AppLovin to see how it responds to these substantial allegations. And there you have it, the latest act in the AppLovin's saga that's capturing the attention of tech investors and legal eagles alike. Stay tuned to see how this story unfolds and whether AppLovin manages to clear its name, or if this digital love affair turns into a cautionary tale. Keep your devices plugged in for more updates, as the repercussions of this legal tug-of-war could potentially ripple across the tech sector. Today, we're diving into some stormy skies over the trade desk, which is currently making headlines on Wall Street, and not for the best reasons. So what's cooking in the trade desk's kitchen that's got investors and the legal world all fired up? Let's break it down. First up, it appears the trade desk is entangled in a web of securities fraud allegations. That's right, not one but two heavy-hitting law firms, Levi and Korsinski and Kirby McInerney, have joined the party, alerting investors to class action lawsuits. These lawsuits claim that the trade desk painted a rosier picture than reality of its shiny new AI forecasting tool, Kokai, as it transitioned clients from their older platform, Solimar. The buzz seems to have started when the trade desk reportedly hyped up Kokai's rollout, assuring everyone of its seamless integration. In reality, the company encountered significant hurdles in getting it off the ground. Picture this. They promised a smooth transition, but the engineering hiccups popped up like bad ads on a slow internet connection, delaying the transition and impacting their revenue reports significantly. The firm's fourth quarter numbers added fuel to the fire. Instead of the anticipated $756 million, revenues rang in at $741 million. Yikes. Not fun when your shareholders expected a seamless ramp-up as they were promised. The plunge in faith was visible when trade desk stocks slipped off a cliff by 32%, dropping from $121.23 down to $81.92 overnight. These numbers, my friends, got the plaintiff alarms ringing. Adding another twist, Trade Desk CEO Jeff Green stated during the earnings call that certain pieces of the rollout delays were deliberate, a strategic slowdown, if you will. He admitted the dual system strategy, maintaining both Solimar and Kokai, inevitably slowed down progress, impacting the company's primary business operations and leading to lost revenue growth dynamism. So why does all this matter to you, dear investors and tech enthusiasts, rafting the waves of NASDAQ? Transparency in a company's grand vision, along with its bumps and blunders, greatly impacts the stock market and your financial interests. The teeter-totter between hopeful canvas dreams and actual tables turned can leave investors dubious or excited. Industries spearheading AI innovations should take this as a cautionary tale for executing plans without a hitch and skating the tech thin ice carefully. And now, over to you. Trade desk investors or future financial adventurers, what are your thoughts about these rolling clouds? Does it sway your trust in AI rollout promises in the dynamic tech industry? What else should companies ensure to keep shareholders bullishly bounding rather than slipping off the edge like a vintage internet connection? Drop your thoughts, comments, and fiery predictions below. Howdy to all your digital crystal ball updates, because in this Internet 4.0, today's small fluttering butterfly might just spur tomorrow's tech news tsunami. All right, folks, let's sail through the Apple wave today. If you're clutching onto your shares of Apple feeling like a squirrel watching nuts roll downhill, let's talk strategy. Would I buy, sell, or hold? Given the scenario, there's a lot of buzz around the looming tariff threats, galactic-level stock dips, and our faithful analysts making bold predictions like it's a Hogwarts sorting session. So, what's the play? On the one hand, we saw a jarring 10% plummet in Apple stock. Ouch. That busted quite a bit of market cap, and the potential tariff costs reaching an eye-scrunching $39.5 billion could be a loud horn for some to cut the line and sell. But hang on, a deep dive shows a little shimmer in this turbulence. Needham analyst Laura Martin remains bullish, suggesting a buy rating with faith in Apple's potential tariff exemptions and a price recovery target of $260. And remember, Apple's committed a hefty $500 billion to boosting its American infrastructure, a move sparking hopes for reduced tariff shadows later. Other visionaries think the shifting production landscapes might just be Apple's pivot to a pioneering manufacturing approach, though the journey might be bumpy. Taking this all into account and being mindful of Apple's reputation for resilient innovation, I lean towards a hold strategy here. Even amid volatility, Apple's foundational strength and proactive measures strive to rev their engines towards thriving in the future market. However, I must stress to all budding investors, my nautical compass in this situation is just one reading. Always do your own research, consult your financial advisors, and only sauna in stock ventures according to your wit and wisdom. Apple's ship is navigating treacherous waters, but clear skies might just be over the horizon for the patient mariners. Ting. Wow, what a ride the tech market went on today. From Apple's titanic struggles navigating US tariffs and a massive stock slump, to AppLovin's courtroom drama over alleged advertising shenanigans, to the trade desk's face-off with their AI rollout woes. It's clear the tech giants are hitting some turbulence, with investors and analysts glued to each headline. So if you're tracking these dramatic tech tales, remember that market swings like these can sometimes open doors to smart investing decisions, or at least a front-row seat to industry twists and turns. Plus, there's always more news brewing in this wild digital west. If you enjoyed today's recap of roller coaster tech news, don't forget to like, subscribe, and share with fellow news enthusiasts. And don't miss Monday's episode where we uncover what other spicy developments unfold in the tech landscape. Have an awesome weekend, everyone.